What's going on, money lovers? Welcome back. Today I want to do another video on Scotts Miracle Gro. As you can see here, it's down over 5% today. This company has just been getting clobbered, and if we look at the 1-year chart, it was all the way up to $250. Now it's down to $145. So I did just pick up a few more shares of Scotts Miracle Gro, and I'm going to go over why in a second here. And I'll drop a link below to the in-depth analysis of Scotts Miracle Gro that I posted about a month ago. Couldn't really find any news as to why it's down so much. It could have just been an analyst downgrade or something, not really sure. But when we look at the numbers, I mean, this is just a great company. If you do any type of gardening, I'm sure you've used Scotts Miracle Gro type products around your home. PE ratio is 15 versus the industry average of 21.5 right now. They pay a $2.64 dividend, comes out to about 1.74%. And the payout ratio there is around 74%, so it's sustainable. Definitely some room for growth. They've increased their dividend for 11 consecutive years. It's a quarterly dividend. This is a company that steadily keeps increasing revenues. As you can see, this top graph here, each year revenue is going up and up. Now, it's not by no means a huge growth company, but it's got some slow and steady growth here. And what's most exciting about this company, I think, is their Hawthorne acquisition and how you can use this company to play the cannabis sector. So we'll get into all that in a second here. I'm going to touch back on some key highlights from their Q3 earnings. So their third quarter sales increased 8%, which was driven by the Hawthorne segment of the business of 48%. So it's right from their site. So their Hawthorne segment carries a broad offering of soils, nutrients, supplements, and professional technical services for both conventional and organic hemp farming. So this is the most exciting segment of their business that has the most growth potential, and I think it's a great way to play the cannabis markets if you have an interest in that. Scotts Miracle Gro gets some decent exposure, and I'm sure you'll see more of this to cannabis ETFs. So the ticker symbol here, TOKE, the Cambria Cannabis ETF. Scotts Miracle Gro makes up 8% of that ETF. This is all from their Q3 earnings report. So the CEO had said, our evolving vision is to create the optionality to have an early mover advantage in the broader U.S. cannabis market when federal law allows. There's little doubt this industry is poised for significant growth. So that's very true, and what's great here is that it's not an all or nothing scenario. They have decent exposure through Hawthorne to the cannabis markets. They stated, based on everything we're seeing, it's hard to imagine growth being below 10 to 20% next year. So the fact that the conservative estimate is double-digit growth is great to see. And this is a company with an $8 billion market cap. They've obviously been around a long time. Some other key points from the quarterly report: they saw continued strength of the U.S. consumer business. Consumer engagement remains strong, and by the time we navigate through the next year, we expect to have retained nearly all of the growth captured in 2020. The trends for Hawthorne remain extremely strong, again up 48% in the quarter, and we continue to expect growth of 40 to 45% on a full year basis. They announced a small but strategic bolt-on acquisition for Hawthorne. We continue exploring opportunities that are bigger in scope. We are increasingly committed to finding creative ways to invest in other areas of the cannabis industry. So if they're able to do that, obviously they'll have a huge first mover advantage, and while everyone else is competing to do the same thing with cannabis, maybe they can find other ways to profit from the industry, which would be highly beneficial. They had stated for more than a year, I've been telling anyone who would listen that I believe Scotts Miracle Gro would exit COVID a fundamentally stronger company, and the deeper we dig, the more we analyze, the more I'm convinced that is exactly what's happened. Our consumer base today is vastly bigger and more engaged than prior to the pandemic. Our relationship with those consumers is stronger and more personal than ever, thanks to the overhaul of our marketing programs. Our ability to engage on their terms is better today due to the vast improvements of our direct-to-consumer initiatives, and our ability to provide them the best possible outcomes has been made even easier by an innovation team that continues to turn out important new innovation. Our growth engine, Hawthorne, continues to outperform the market and is positioning itself for long-term success. We've built competitive advantages that others in the industry can't match. I think that this is a fantastic company to buy and hold for the long term. And I think especially when you look at the 1-year chart of this company, I mean, it was all the way up to $254, and now it trades at $145. If you're interested in Scotts Miracle Gro, make sure you subscribe. So their next earnings report is scheduled for November 3rd, so I'll definitely be covering that. So if you enjoyed the video today, please don't forget to like, subscribe, and drop a comment below. Let me know what you think of Scotts Miracle Gro.